Good morning. It's nearly lunchtime, but I'll make this fun. My name is Ye. I'm the founder and CEO of Theia Insights. We build foundational AI for the global investment community. So you might wonder, what does it mean for models to be foundational? Right? We've all heard about foundational models for Gen AI. They are large language models that have read the internet, that they are able to generate language that makes sense most of the time. But for investing, foundational models need something else. Because investing is based on an understanding of the economic and financial landscape. Right? So what is the economy? If you think about the core of it, is groups of people doing different things, making different products and exchange with each other. And finance is resource allocation. You allocate resources among these different groups of people and among different time points to maximize economic outputs and to get a return. So foundational models for investing needs to provide you with this landscape of an understanding of the economy and the movements of investments. And that's what we do. So the name Theia Insights, is named after Theia, which is the goddess of sight. What we do is that we synthesize and distill vast amount of data so that investors can see the market clearly. Specifically, we built two foundational models. One is our dynamic industry classification. That's what Marco just mentioned. And the other is a thematic factor model. And based on these two technologies, we have a few application models. So we have, for example, ETF and mutual fund thematic exposure, concept to basket, and portfolio analysis and report generation. Industry classification. Why do you need it? Because you need to know what exists in the economy and who does what by how much. So what we do is that we process data of public and private companies. For public companies, they are data such as filings, earnings, websites, even news information. And it's a self-learning knowledge graph that emerges from the data what industries and themes exist. And for each company, who does what by how much for the public and private market. So for example, our taxonomy goes from 10 sectors all the way down to over 3,000 micro themes. And as an example for each company, for example, NVIDIA, at a particular point, the model reveals that it has certain percentage of exposure to semiconductor, gaming, artificial intelligence, hardware, and cloud computing for different proportions. And because the taxonomy itself is a self-learning system, you can also see what industries and themes emerge and how they change over time. So here is an example of companies that are engaged in things to do with AI platforms versus relevant other topics. And the lines at the bottom there you can barely see is because they are shadowed by the boom of AI platforms from 2022 to 2023. But if you enlarge them, you can see the other concepts that are relevant to AI actually had a dip because of the boom of AI. The other example is that recently there's a concept in the Far East that the model determined or picked up, which is low altitude economy. So that's to do with like passenger drones and air taxis, and that's becoming very popular in the Far East, and kind of Middle East is also picking up. And that's the kind of thing you can see as a byproduct of this dynamic industry classification. Second thing, factor model, in particular a thematic factor model. What is a factor model? So if you think about stock price as a sound wave, okay? And like imagine as a sound wave, if you're having conversation with your friend in a restaurant and you record the sound wave, if you look at the graph, it doesn't make much sense. You just have things all going up and down. But what you want to know is to break down that sound wave into your voice, your friend's voice, the background voice, and the music, so that you can interpret each of the components clearly. And that's what a factor model does. A fact model takes the stock movements of all of the companies and the market and break them down into systematic factors. So that include microeconomic and style factors like the general market, like interest rate, and the style of the companies, for example, how conservative a company is, and the size of the company, and also industries and theme factors. So you want to know how much of the movements, for example, is caused by cloud computing versus clean energy. And that's what we provide. So we provide dynamic and over 200 thematic factors to break down the movements of each stock. As an example, here's a particular day of data for American Express. And there's some exposures of it, how much of that is affected by microeconomic and style factors. But you might not know that American Express is more sensitive to the travel industry than the banking industry. But if you look into it, it does make sense, because American Express have a lot of business with hotel chains and airlines. So in fact, travel industry affect American Express more than banking. And I'll just show two applications on top of these two technology. One is concept basket, allow you to translate thematic concepts to a taxonomy and baskets. So as an example, take AI and AI beneficiaries, for example. Our model take that concept and create a custom taxonomy of all the sub-themes that are related to AI. There are, of course, things that are natural and obvious, like natural language processing and semiconductor, but there are things that you might not have thought about. For example, precision agriculture. And from that taxonomy, then there is a list of equity, each with its relevant score, and an explanation of why that equity is related to AI or AI beneficiary. Last example of application, ETF comparison, ETF exposure. ETF, of course, ETF investing has had a boom in the last few years because it's very investor-friendly and provides you with baskets that are less volatile than single stock. The challenge is to know what is in your ETF. So given our model, ETF exposure provide a common language for you to compare, analyze, and cluster ETF thematically. So here is the breakdown of what ARKK has exposure to, according to our taxonomy. So the top topics in ARKK is blockchain, digital platforms, biochemical and biotech, genomics, and so on. Now you might want to know, okay, if I'm going to invest in ARKK, I want to compare that with similar ETFs. What are the most similar ETF to ARKK? And actually, the most similar ETF to ARKK is ARKF. It's kind of a variation of itself. So ARKF, I think, is next generation web. And the other thing I want to do is that when you're composing your portfolio, you want to find the most dissimilar ETF to ARKK. So you can find orthogonal ETFs. So there are many orthogonal ETFs to ARKK. And one example is, for example, JETS. And they are focused on aerospace, airlines, and so on, that have zero exposure overlap with ARKK. So this is what we've built, but I just want to take a step back and say, mention a little bit more about AI models, because that's something we talk about all the time right now. But it's an interesting time in history that for the first time that silicon intelligence, AI, might surpass carbon intelligence, which is human. And we're worried about us being replaced by AI. We won't have jobs in the future. But I think the future of AI is not about silicon versus carbon, but it's about silicon plus carbon. Because for the first time, we have the ability to gain the level of perspective that's never possible before. Because what takes us hundreds of years to read takes minutes or seconds for AI to read and digest. So it's important to build systems and models that not just generate more data, but synthesize data to provide us with a higher perspective. And in investing, that means for us to be able to see what's going on in the economy clearly so that you can invest in things that truly align with what you want the future to be. So with that, I'll say thank you.